What's up, Gould Miners? Here today with another mini Gould nugget for you. And if you are new to hotel investing, or you have been a hotel investor for a while, and if you're interested in investing in hotels, this episode is especially for you. I observed something the other day on a deal that I was underwriting that I thought I would bring to everyone's attention, seeing as how this is something that I believe is going to be impacting, or something that is going to be a trend moving forward. So a backstory about this hotel pre-COVID was operating as a Hilton property. It lost its flag, so it became unbranded, unencumbered after COVID. And we're planning to buy it, or we were thinking about planning to buy it. And, one of our investment strategies was to add a flag back to the hotel to get it branded again, either with Marriott or Hilton, ideally maybe Hyatt or Choice, but in all likelihood this would have been a Hilton or a Marriott repositioning. And so when we do this, there are certain assumptions that we make. Well, yes, we are adding a brand, yes, we're adding a flag, which means that we're going to incur some franchise fees, but what we look at when we're underwriting is, how is the hotel operating right now? How is it operating pre-COVID, or before while it was encumbered or while it was flagged? And would adding the franchise back into the equation more than make up for the difference in franchise fees? And initially, the underwriting and everything that we were looking at showed that the hotel would perform better as a branded asset versus a non-branded asset. And the biggest factor there was the occupancy rate. The occupancy rate was at 96% pre-COVID. It's a crazy deal. But then after COVID, now it's at 78%, 79%, somewhere in that vicinity. And so we're kind of like doing the math there and looking at that spread. We're like, wow, that's a 17% occupancy spread that we lost. And only big change, of course, was the flag. And so my initial thought was, hey, this could be a really good deal. And by the way, this is a really good deal for a lot of different reasons, but this looked like a grand slam deal because we think, okay, we put the flag on it and all of a sudden we're rocking and rolling. Well, not so fast, because upon further examination, when we looked at the comparables, when we looked at the comp set, it was flagged before and not flagged afterwards. The comp set was relatively the same. And so when we looked at the penetration index, when we looked at how the hotel was performing compared to other hotels, we noticed that the penetration index was almost identical pre and post flag. So essentially, even though the occupancy dropped dramatically after the flag was removed, and we could assume, might assume that losing the flag was the reason for the occupancy drop, when we look at the market in general, the market occupancy dropped. And so this is not a scenario of the flag being the culprit, but rather, or the lack thereof rather, but instead the fact that the market in general has dropped fairly significantly, and that the culprit would be COVID, and then the recovery after COVID. Now, I know this market well enough to know that achieving 90% plus occupancy in that area is more than possible, because we've underwritten other hotels in that same neighborhood. And so I think that there's a little, the truth lies somewhere in the middle there. And there's a very good probability that we're going to be going after this asset. It's completely off market. If you'd like more information, you could let me know. You could reach out to me at, below. But the point is this, that as investors, it's easy to make assumptions, for XYZ reason that something is true, but we have to look at multiple data points to make sure that we're actually, the assumptions that we're making are actually based in reality. Because initially, like just first glance, we passed the eye test. Hey, before COVID, after COVID, when the Hilton flag was on it, after the Hilton flag was on it, that's a very easy narrative to picture. Number one, it's like a very easy narrative to believe that because the flag was lost, that we lost a lot of occupancy. But when in reality, we looked at the penetration index, and the hotel was moved almost identical in comparison to the market. So it lost the occupancy that the rest of the market lost. And so for that reason, we reassessed, or we reevaluated the property with different standards, with different underwriting or different projections or assumptions, right? And so anyways, just some food for thought for you on this beautiful morning, and hope you found this little gold nugget useful.